Robert Shiller joins us right now, economist and Yale professor, on that backup in interest rates that some might like because it shows a strong economy, but if you're looking for a house around now, it could get in the way. How much of the way, you think, Robert?
Well, I think when the mortgage rates were low, when they were exceptionally low, that was helping drive the housing market. Now we're getting back into more normal territory. I expect that it will be a weakener. There is some sense of weakness in the housing market. Notably, the Case-Shiller, S&P CoreLogic Case-Shiller indices that we work on are showing some. They're still going up, but not quite as fast.
So what does that portend for next year? I mean, obviously, the Federal Reserve has indicated, and Jerome Powell, the chairman, has all but guaranteed a trend that'll continue.
Right, so there isn't much news coming out. You have to really look hard from the Fed. They're on target to increase interest rates, just as the inflation rate is tipping up above the target rate. So they're eminently predictable, which is a good thing.
Yeah, I guess it would be. You know, for a lot of people, the problem seems to be, interest rates going up can lock some people out, but appraisals are still stingy, I'm told. How much of a factor is that?
How much is a factor? Well, I suppose appraisers use comparable sales, and
right.
They would be lower. So you have to correct for a trend. There is an uptrend in both the housing market and the stock market, which has been going on for years. The real question in my mind is what's driving this trend. It's not just Trump, it's also Obama, because it's been going on for so long. These trends do come to an end, and sometimes they come to an abrupt end.
You know, do you think we're back to the giddiness that surrounded real estate before the meltdown? I mean, I still see a lot of reticence on particularly the part of the young, maybe for different reasons. I don't see it nearly as frothy as it was back then, but I could be missing something. What do you say?
The frothiness, I guess that's a Greenspan quote, right, which is an understatement. The frothiness was extremely unusual in probably around 2005, 2006. I don't think we'd ever had such a exuberant housing market. Maybe right after World War II, but when there was a housing shortage. But other than that, it is exceptional. And then so also was the correction. The decline in home prices after 2006 was the biggest we've ever seen in a short interval of time. So it's that is a unique. We shouldn't always be fighting the last war. I don't think we're as exuberant or as bubbly now, at least not yet.
All right. Robert Shiller, always great catching up. Thank you very, very much.